Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a session where we've recouped a lot of the losses that we've seen from Monday. So currently we have the Nifty, which is higher, as well as the Sensex and the other indices. In fact, we have the mid-cap index, which is up around 1% at par with what the Nifty is doing today, up around 1%. The advanced decline ratio standing tall at around 2,400 stocks advancing to around 1,651 stocks declining on the Bombay Stock Exchange. We have a lot of queries left to answer, so let's get going with that. We have Ruchit Jain of 5paisa.com joining in and to answer a couple of your technical questions today. Ruchit, before we start talking about key queries, wanted your thoughts in terms of the indices, the kind of gains that we've seen in today's trading session. We've recovered from those lows that we saw on Monday.
Yeah, hi, very good afternoon, Ekta. So, Ekta, if you see last 4 trading sessions, in fact, this entire week after that opening with a gap down around 24,300, we have seen the markets consolidating within a broad range where 24,500, 450 now seems to be the resistance, which is the 50% retracement of this entire correction, which we have recently seen. On the other hand, 24,000 is likely to act as a support. So, signs of consolidation in the index is there. I think momentum is more based on the global markets move, because if you look at the derivatives positions also, FIs have long short ratio of about 51% only. They have trimmed their positions from 67% long short ratio at the start of the series, whereas client section have long short ratio of about 53%. So none of the market participants are looking to build aggressive positions for directional, either on the long side or on the short side. So I think signs are there that we may see some more time-wise correction, probably 24,000 to 24,500. I think this range should continue in the near term.
Okay, all right. Well, just to put it into perspective, the Monday intraday low for the Nifty was around 23,893. So from those levels, the Nifty is up around 477 odd points. But we do have a lot of queries for today. So we have, let's get to the first one. We have Indira, who writes to us from Andhra Pradesh. She holds 10 shares of CCL products, which she's bought at around 593. So she's sitting on a profit. She wants to know what to do, whether to hold or to sell this particular counter. So what would you suggest on the technicals of this one, Ruchit?
The position structures look quite positive. We have seen a price up move supported by good volumes, I think, post the quarterly numbers which it posted. But no, technically also, if you see, then the downside seems to be very limited from here on. 600, 580 is a very good support zone for the stock. Some resistance for the short term is there around 700 mark, but I think once we surpass that 700, then the stock could potentially rally towards 750 to 770 kind of range. So downside seems to be limited from here on. So I would suggest to continue to hold on the positions with a stop loss below 580.
Okay, all right, fair enough. Well, we have another query now. We have Rahul Jain, who writes to us from Mumbai, holds 30 shares of Power Grid, which is bought at 200. He wants to know what to do with this particular counter. He's sitting on a good profit, wants to know whether he should exit or he should probably stay on in this counter. 30 shares bought of Power Grid. What would you recommend to Rahul, Ruchit? Should he probably take some profits off the table, or do you think that there's more upside for Power Grid?
So one thing I can make out from his buy price that he's a long-term investor. Overall long-term structure for Power Grid still remains positive. If I look at the price volume action, then in last few months when the prices have rallied, the up moves have been supported by good volumes. Whereas on any correction, we have not seen any volume-based selling in the stock. So I think there is a good potential for this uptrend to continue in the near term. Maybe even if we get some corrections, there would be more of a time-wise corrections rather than price-wise corrections in the stock. So I would suggest to continue to hold on to the stock from a bit mid to long-term perspective. If the uptrend continues, then the stock even has potential to rally about towards 380 to 400 kind of range.
Okay, all right. So that's on Power Grid. Just want to point out that now Zydus Life is picking up pace. That stock is at the high point of the day. It's up around 2.5%. So you're seeing some amount of rewards coming through in terms of specific stocks today. So that stock is higher. We have Trent, which is shown a good traction post what was a very healthy set of numbers. So Trent really is one of the stocks of the day. That stock up around 10%. Welcome back. Well, we still have with us Shaina Mukaddam as well as Ruchit Jain to answer all of your stock queries. Well, we do have one query coming in from Shashank, who writes to us from Mumbai. He holds 720 shares of IDFC First Bank at around 80 odd rupees. He's sitting on a loss on this one, so he's asking what he should do with it. Well, Shaina, let's get your take first on this. What would you recommend that one does with IDFC First Bank sitting on a loss right now?
Well, it is not my topic in the sector. At the same time, I believe that, at current levels, it could bottom out, after having, the stock has corrected a lot. And in terms of price to book, it's about 1.7. So it is not overtly expensive and it has potential for growth going forward. So it could bottom out from here. But I think at current levels, if you want to get into a new stock, then private sector, some of the banks like ICICI Bank, etc., which have consolidated for quite some time, look like better bets for the longer term.
Okay, all right. Well, on a year-to-date basis, it's underperformed, Ruchit. IDFC First Bank is down around 17 odd %. Any kind of upside, any target that you would recommend on this?
Well, yes, surely a clear underperformer within the banking space. Even when the Bank Nifty recently had rallied towards new high, I think IDFC First Bank did not participate as well. So the trend still continues to remain down, but it's just because the momentum readings are a bit oversold. Then we can expect some pullback move. But any pullback move towards 78 to 80, I would recommend to take an exit from the stock and switch to some other private sector names. Maybe Federal Bank compared to IDFC Bank, if you look at the chart structure, looks much better from mid to long term perspective. So sell on rise would be the call for IDFC Bank. Pullback towards 78 should be used as an opportunity to exit and shift on to stocks such as Federal Bank.
Okay, all right. Sell on rise is what you'd recommend on IDFC First Bank. Well, we have PC Achaya, who writes to us from Bangalore, holds 60 shares of Asian Paints, which is purchased at around 2,900 odd rupees, and is asking what to do with this particular counter, sitting on a profit as of now at around 4,000 odd rupees. Shaina, let's get to you first. There's competition increasing within the paint segment. Asian Paints, do you think that it would probably continue to be one of the leadership stocks, a blue chip that one should have in their portfolio? What would you recommend?
See, it has been a blue chip stock, but if you see the recent past, we've seen a lot of competition coming in from very strong players. We've seen this impact also in the first quarter. If you see the volumes were just about 5 odd %, if you compare it, which is much lower than the previous years. So to that extent, we're seeing a slowdown. They are trying to take price increases, small ones, and trying to support the growth. But I believe, even in terms of valuation, if it's like 1 year forward, 40 times P, while it's a great stock to hold in the long-term portfolio, I believe a lot of it is priced into the current price. So, if you're looking at for a 1 year good return to beat the market, then I think one needs to switch from Asian Paints. You can book part profits. Rest you can keep in your long-term portfolio, no issue.
Okay. All right, and Ruchit, what about you? Asian Paints is down over 10% year to date. What would your recommendation be at current levels?
So I think the price-wise downside seems to be very limited from here on. In July 2023, the stock registered a high of around 3,500. And it has already corrected from 3,500 to 2,700. What we are witnessing is in the last 3 months, this price-wise correction has now turned into some time-wise corrective phase. So maybe from a short-term perspective, the stock may remain range-bound. 2850 to 3150, 3200 seems to be the trading range for the stock. But downside seems to be limited from here on. So if you can have some patience and hold for maybe 6 to 9 months, then one can expect a move in the stock, but not in the near term. So if it's for mid to long term, then continue to hold on the stock.
Okay, all right. Well, that's on Asian Paints, but we do have an SMS coming in or a query coming in from Madhvi from New Delhi. She holds 450 shares of IRFC, which she's bought at 189. She wants to know what to do, whether to hold or sell this particular counter. Well, a couple of these stocks have corrected, Ruchit. IRFC, for example, is down 6% this month, 7% this month. Do you think that it's probably prudent to take some profits off the table, or are you anticipating a bounce back?
So I think the stocks would go through some consolidation phase. These railway names post-election results till the budget had rallied very significantly compared to the market return. So I think that outperformance was there, but now the momentum readings were quite overbought post this up move, and these stocks have started correcting. We may see some more correction towards 165, 168 kind of range in the near term. So if it's a short-term position, then can look to exit from this one.
Okay, all right. And what about you, IRFC, Shaina, on the fundamentals?
I would agree. I would believe that, one could book profits exit at current levels. Basically, the government holds 86% of the equity. And there is a likelihood that, it would tap the markets to, dilute its stake. Given that fact, the valuations are very expensive. If you look at price to book, it's almost about 5 times. So for an NBFC, it is expensive. P is also 35. So the upside from here, how the government can price its issue is likely to keep the stock in, in a consolidation phase. So I believe one should switch.
Okay, all right. So you recommend switching from IRFC. But now we have a question coming in on Indian Hotels. We have John, who writes to us from Kerala, holds 500 shares of Indian Hotels, which is purchased at 430. Wants to know what to do, whether to hold or sell this particular counter, sitting on a good profit at this point. Ruchit, do you see further upside? What are the technicals?
Technical structure still remains positive. For last 3 months, although the stock has not moved much, but this just seems to be more of a time-wise correction within an uptrend. The stock has a very strong support base around 540, 550 kind of range positionally. And till these levels are intact, I think any decline if comes in the stock, we would see a strong buying interest over there. So price-wise downside seems to be limited. I think it's just along with the markets, it is showing some time-wise correction. And once this time-wise correction gets over, we could see a resumption of the uptrend and the stock could rally towards 680 to 700 kind of range.
Okay. All right. 680 to 700 is your target. Is that correct, Richard?
Yes, absolutely.
All right. Fundamentally, what would your target be on this one, Shaina, Indian Hotels?
Yeah, while I believe, the stock is expensive at current levels, if you look at it, if you look at it 1 year forward, it's almost EV by EBITDA of about 23 times. So it is not cheap. So I would expect, 10 to 15% increase. This is more in line with the growth that is likely to come about in the next 2 to 3 years. They're talking of adding about 10% keys to the existing. They've got almost about 11 or 12,000 keys. So to that extent, there will be growth coming in, and that I think should take the price higher. And also, I think if we saw the first quarter numbers, the remaining part of the year should be better. So it is consolidating a bit, but I think going forward, it's a portfolio stock and one should continue holding it for the longer term.
Okay, well, a bullish call coming in on Indian Hotels there, portfolio stock. That's the word coming in from Shaina. But on that note, Shaina, as well as Richard, we're going to thank you. That's all the time that we have on the show. Do remember to email us your questions and we'll address them with our experts. Closing bell to take you through the last hour of trade.